Welcome back to the Talking Hedge. Josh Kincaid, and this is your Cannabis Business Podcast. Today we're going to be diving into a Midwest cannabis report. On the line is Dan Chemist, our CBD correspondent with Good CBD Products. All right, this report is from Brightfield Group. They start off by asking about the business landscape and what the Midwest really looks like. They let us know that the market opens in the eastern U.S. with regulations favoring a small number of players that have risen, with multi-state operators comprised of chains of large vertically integrated cannabis operations, usually anchored in the east part of the country, whereas now multi-state operators are taking advantage of the changing landscape to grow larger, either by applying for permits in new emerging markets or using acquisitions of local players to enter into these new states. So below, Brightfield Group has created a summary of some of the recent mergers and acquisition activities by a few of the largest multi-state operators in the industry today. So just to give you some idea, you probably heard of MedMen, a big retailer. There's some other multi-state operators like Verano Brands. They have 37 retail licenses in 11 states, covering over 150 million Americans, along with ownership of Zen Leaf retail brands. So this is very similar to Curaleaf, based out of California, that just spent another $800 million on an acquisition. Previously, they had spent almost $1 billion to acquire an Oregon company. Recent news with MJ Business Daily reported that about another $800 million spent as a multi-state operator to take advantage of emerging markets. I don't think the Midwest is any different. Once you take on Tennessee and Alabama and Louisiana, then you get to the Gulf Coast. You have to deal with hurricanes, but there's still a market out there.
You know, this speaks exactly to what we're seeing on the ground daily now. The thing I find interesting, right, is you could definitely see where the way the Midwest and the Eastern Seaboard are developing, they've seen some of the failures out West, and their rules are different, right? It's really interesting.
So this article from Brightfield Group asks, will the growth continue to be driven primarily by West Coast behemoths? And I would actually argue that I don't really think it has. It's come from the East Coast. There's been huge multi-million-dollar acquisitions in Pennsylvania and Massachusetts. MedMen has been expanding from east to west. What you're seeing in the West Coast, California just legalized. They haven't even really started. In fact, they have the least amount of investment capital as people try to wait and see what happens. They've seen the conundrums in Washington State that don't have vertically integrated opportunities. They've seen the 6.5-year supply in excess in Oregon. They've seen the cutthroat competition in Colorado and the lack of really supply or demand in Alaska. And then nuances in Nevada have made it difficult too. So I don't know if the West Coast is really driving the expansion as much as the East Coast.
I would agree. I mean, my own view is this. The West Coast has been an example for the most part on inefficient ways to do this. A good portion of where we're going to go do our next set of fact finding is, you know, central and out east and all of that stuff, because again, undiscovered country, right? New opportunity.
Illinois is the 11th state to go legal. So this article goes in to say that the current market leaders, which is Colorado and Oregon and Washington, comprise 42% of total U.S. sales. And then the emerging states in eastern states like Illinois and Massachusetts, Michigan, New Jersey, and New York register only 11%. And a lot of those states haven't even gone online, so it's kind of an unfair comparison. But yet you're looking at California, which has been the most recognized state for cannabis use in the past, and their regulation mishaps and underwhelming program rollouts have left them with much less market share. So they expect that by 2023, Eastern markets will make up for 34% of the total U.S. market, while the Western originators will lose 20 points of market share, dropping 20% of total sales. I mean, that's just statistics, right? Anytime you have it in an emerging market, it's going to take away the overall shares anyways. So that's natural. But I think that they're going to look at what the mistakes we've made, hopefully make them better, although we've already seen in Massachusetts taking Washington State's limited out-of-state investor and really restrict that. We've seen that growth has been restricted by limiting out-of-state investors. So hopefully Massachusetts and Maryland will figure that out down the road.
I mean, don't get me wrong. Millions of dollars is real money. but tens of millions and hundreds of millions of dollars. My gosh, right? And it continues to flow in. What's got me so excited about going east, right, is this. Okay, one, real money, the difference between when Washington first went, when Oregon first went, is today, again, you're seeing 8- and 9-figure deals and resource coming into the market. Well, that's crazy, right? And to watch these markets launch when that kind of money is in the market, because it wasn't like that 4 years ago, 5 years ago in Washington.
We've seen in Nevada, Las Vegas specifically, with the limited amount of producer and processors and retailers kind of keeping almost a monopoly. And so those prices have remained artificially high outside of other states that have gone legal because of that limited supply and with a larger demand. And so Brightfield Group asked the question, how is the U.S. cannabis market expected to grow? Well, the U.S. cannabis market is going to reach, according to them, $23 billion in the next 4 years with a compounded annual growth rate of 20%. But the majority of that growth is going to be driven by the recreational sales, particularly from the newly opened, fast-growing states in the Midwest and East Coast. So there will be a 20% shift from West Coast to East Coast just as they come online. I mean, Boston alone has 5 universities. And so, I mean, if college towns drive some sales like I think they will, they'll be selling a lot of pre-rolls.
I have a different lens. What I would say is this. In the end, it all comes down to, people. Where's the most people? California is going to sell a lot of weed because there's a lot of people. Ultimately, part of the reason California is so attractive to people is 10% of the U.S. population is in California, right?
Yeah, exactly. So with that, California's got some new regulations. Brightfield Group asked the next question, what does the regulatory landscape look like? It's evolving constantly. We saw in Washington State, the regulators, the Washington State Liquor and Cannabis Board implemented some rules that could have affected 70% of the edibles market by implementing new colors and shapes. And so you really need to stay nimble, like you've mentioned in the past with previous episodes. And so there's an evolving political and regulatory landscape right now that could impact the future direction of the cannabis industry. The States Act is interesting because that's regarding banking, and that allows each state to have its own rules or laws. And so it kind of diminishes the federal law as it pertains to cannabis. If the States Act is implemented, it gives banks the ability to start lending, and we all know that capital makes the world go round. And so with that investment, you could see a lot of changes from automation and technology, a higher workforce, more normalization, people leaving for speculation in corporate America and coming to the cannabis industry. Could just change everything, perceptions from top down.
I'm kind of betting on the legislation coming out of Oregon where they're going to make a run at, running it across the borders, right? And I think it's going to work, and I think it's going to change a lot of things.
Well, hopefully some future states will learn from our past mistakes with some expectations next year. Connecticut might get some legislation, Maine in 2020 as well, and then New York they're expecting in 2021, as well as New Jersey and New Mexico, Arizona 2022, and Vermont. So that's quite a few sales, within the next 2-3 years to kind of expand that. And so looking at comparisons on East and West Coast, just Canada in general, because it covers East to West, they changed kind of the trend that we've seen where prices start at about $30 a gram and come down to $15 a year later. Whereas Canada just came out and said, we're going to just start it on average at $15. And then I think the average even dropped to around $11 and change shortly after more stores opened. Vancouver was the holdout. As soon as they did, then the prices finally came back down. But in terms of what the East Coast is going to do with pricing, I don't know. I mean, the real estate, cost of living in Boston and New York are much higher, Chicago. And so I'm not sure how the laws are going to be what we saw in Ohio was very much a monopoly where only 5 people had control of the entire state. So hopefully that's not the case. We've seen in Florida where they want somebody to have 30 years experience and $20 million. That's not really fair. And so there's a lot of regulation. There's a lot of differences in each law, or each state is going to have its own law to do what they will. I'm not really sure what's going to happen and how it's going to compare. They're really different cultures. We're worried the biggest difference in the East and West Coast.
Certainly. Well, again, one of the things we're seeing now, right, is a market leveling with regards to pricing. You actually saw at one point retail cannabis in Washington had gotten to the point where you could buy an ounce of cannabis for $30, $40, and again, that's retail, right? That's retail. Well, it was 5 years ago, and I'd pay 10x that for underground cannabis, right? You pay for high quality cannabis. So anyway, I guess watching the leveling in Washington, actually watching prices slowly creep back up, reading, different news and trends and all of that, and seeing it, attempt to stabilize at least. And then again, if I'm somebody from one of these new emerging states and I'm thinking about getting in, wow, would I head west for a little while? I would go camp west for a little while and just talk to people, because again, the history of the business, the evolution of the business space is really, it's gripping and it's fraught. It's one of those things where if you're going to do it, go talk to somebody who's done it before, even if the rules are a little different.
So I'm excited to send you on your 10,000-mile journey, West Coast all the way to East Coast to find out, because according to Brightfield Group, California has been fumbling with regulatory nightmares and growth rates are really slow. So what they're assuming is that based on right now, none of the top 5 markets are east of the Mississippi, and yet by 2023, 2 of the top 3 markets will be on the East Coast. So you were right about California continuing to position at the top of the industry, yet they're expecting, that's Brightfield Group, is expecting the East Coast to have Massachusetts and New York commanding a combined 20% of the total U.S. market.
So yes, first context, right? So Josh is dispatching me into the field for a little over 100 days and 10,000 miles on the Western region. We finish up around December, and then I get ready for the next stage, which is heading east. The only way is to go.
I'm also interested to see what's going to happen with the Canadian market right now. Brightfield Group asked the question, how will this impact Canada's rec market? One of the things I'm looking at is with the publicly traded companies up in Canada, they're incredibly leveraged. Canopy Growth CEO was let go because he was an incredible deal maker, but those deals weren't generating revenue. And most of those companies also expect to be able to sell wholesale cannabis flower at $1.70 per gram. And yet with emerging markets in the East, they're starting to steal the U.S. market share already. So this is going to draw attention away from Canadian cannabis marketplaces. You're looking at Illinois, Michigan, Massachusetts, New Jersey, New York are going to have a compounded annual growth rate of 105% over the next 3.5 years, whereas that's doubling Canada's 64% over the same period. So at what point are investors going to take a look at that and say, okay, well, I'm going to liquidate my securities up in Canada. I'm going to sell that equity position in Canopy Growth and all the other publicly traded companies, and I'm going to reinvest that capital into these emerging markets because I see potential, whether they're OTC, that's over the counter, or on a big board trading exchange. I think that this could seriously impact Canada's rec market.
Well, not to be harsh with our brothers to the north, right? Our sisters to the north. At a market size level, Canada is, a pretty good sized state, right? And in turn, they it's an autonomous, they're their own country, right? They got their own rules. They got this, they got that. Right. But in terms of global market share and the cannabis market, again, I think there's a misstep in timing from a bureaucratic standpoint in that, my gosh, they had such a neat early lead as a country, right? And I would say a lot of that's been squandered, and that time. So now you're not seeing that bureaucracy, take ownership of that. The bureaucracy is just operating at the pace the bureaucracy is operating at. The outcome is lost opportunity for an entire country with regards to, early or first position. Again, it's surreal personally to be watching something like that and see that, because that's a moment in history. But at the same time, it's also one of those things that's hard to measure in real time, right? Because, if you're the Canadian government, I don't even know who do you go talk to, right? It's an amazing bunch of forces that are coming together to shape this at a global level. I think Canada actually, in the last year, has really kind of shot themselves in the foot there, Chronic. That's my view.
And I think there are forces at work where that Canadian capital is coming back into the U.S. and the Midwest is our agricultural belt. And I think there will be a lot of opportunities as value investors from the coast, from California to New York, looking at the Midwest as sort of the last opportunity. Like the Midwest is sort of waiting, more conservative, and yet there will be a tidal pool of circulating sharks and investors looking to grab value when there's an economic correction that's expected next year. And a lot of people that have invested too early and have equipment that probably isn't worth it. They're not able to manufacture or produce enough yields. They don't have brand capabilities, etc. Time will tell. It's definitely going to be an interesting spot. So I'm excited to see you travel to the East Coast and Midwest and report back.
I'm going to talk to everybody, boss. I'm talking to everybody.
So with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.